having a list of what my assets are, then the transition of those assets when you pass, it just becomes more difficult. And some people end up in positions where now they are going to have to sell the actual property that they live in.
The executor can also be a vet vendor, meaning that they can add plus 15% to that 3.5. Hello, family. Welcome to episode number 5, A Space to Breathe. Today we have a lovely guest, Chantal. How are you?
I'm good, thanks. And you, Noni?
I'm good. Thank you for coming through.
Thank you so much for having me.
It's a space to breathe. Family out there, just want to say really thank you for being part and parcel of this journey so far. It's been amazing. Great comments. Continue to subscribe, share, like, comments. Like I said, feel free to put any questions that you want to share with us. Today is quite a technical session, so feel free to share those questions. We might not be able to answer them, all of them immediately. Please allow us time to be able to answer each and every question. But if there's any further engagement that you want us to have with you, you can drop us your number or your WhatsApp, your email address, so we can communicate with you further. But like I said, today it's a technical session. We're talking tax problems and estate planning. Oh my goodness, this is a problematic session. I always say it's about understanding your tax. Actually, it's your SARS requirements, really, your tax obligations and your estate planning. Chantal, before we can even go to those technicalities, who is Chantal? What does Chantal do? I don't do introduction to my guests. I allow them to introduce themselves because I don't want to do justice with what they do.
So I am a tax advisor. I have over 15 years of experience in a Big 4 firm. I have spent over 12 years specializing in tax. Currently, I'm an associate director at Ernst & Young. I have a master's degree in tax. And really my focus, Noni, is on how do I simplify tax for my clients,
Yes.
allowing them to focus on what really matters to them while being tax compliant.
Awesome. That is beautiful. Thank you so much, Chantal. And tax is always a problem, not just only for the widows, for everyone out there, really. But I just want to let you know that this is really mostly about how do widows handle these tax obligations? How do they deal with these requirements? Because sometimes it can be so overwhelming. You're going through grief, you're going all these emotions. Tell us then, Chantal, as much as you know that I'm a certified financial planner myself, and I think my viewers know that, and I'm also a CEO and founder of Esteem Financial Solutions, where, of course, we focus on comprehensive financial planning. But today we have our tax specialist in here. So I will let the tax specialist take over. So help us out. Here we are looking at all these things that are happening. Where do we start? Take us through.
So I think, Noni, firstly, it's about understanding what are the requirements. Like, I think when you lose a spouse, it's an incredibly difficult time, right? And tax, then nobody's thinking about it. And then when you realize, okay, I actually have this obligation, I need to do something, that's when it becomes so overwhelming. So then what is the first step? Really understanding what is that and understanding why it's important. I think that's really the first thing is if we don't start to understand what is SARS processes, what is the obligations that you have, you're going to end up in a position where you're not compliant. You're going to end up in a position where there is so many penalties and they add up very quickly.
Yes.
You're going to end up not being able to take advantage of the tax reliefs that are available, and there's quite a few for deceased estates.
Yeah.
And then I think lastly, if you don't do these processes, you're not going to be able to wrap up that estate. And then it's just going to delay your ability to get into a position to be financially stable again.
100%. And you're talking about financial stability. I think we'll get into it later. But I just want to go into these common challenges that widows would experience when it comes to these SARS requirements. Maybe can you just take us through that? Yeah.
I think when you think about it, widows find themselves in a position where they are not sufficiently equipped
Yes.
when they find themselves here, and what do I do?
Yeah.
And I think the first challenge is determining what is the technicality around this. So there's assets, there's liabilities, there's
Yeah.
deductions. What does all this mean? And then when you finally wrap your head around, okay, I understand what it means. Where do I declare it? What must I do? Must I do it on e-filing? Must I do it on my tax return? So there is technical challenges, then there is administrative challenges. And then there is, I didn't even know I needed to tell SARS anything.
100%.
And if we don't notify SARS as step one,
Yeah.
then what happens then? What is the repercussions of that?
And when you say telling SARS, who's telling SARS? And what kind of people do we report to SARS? I mean, is it this person who has passed away? Were they employed, not employed, had assets? Who are these people that we're reporting to SARS?
So it needs to be a taxpayer. So is it a registered taxpayer?
Yes.
If yes, then we need to be reporting it to SARS. And I think before we go there, if we just touch on estate planning, just the start of it, what does that
100%.
actually mean?
Yes, let's go to it.
Let's start there, right? And I think there's a massive misconception around estate planning is just for the wealthy. Like, I
Yeah.
don't need to consider this.
I have a will.
Yes. And some people don't say, I don't even need a will.
Some of them that I don't even need a will.
I don't need it. I just have
100%.
one or two things. Like, how
Yeah.
hard can it be?
Yeah.
But the reality is, if you don't have these things in order, like having a will, having a list of what my assets are, then the transition of those assets when you pass, it just becomes more difficult. Because when there's a will in place and it's valid, it becomes very clear that I am leaving X to person X.
Yeah.
And if that isn't clear, then disputes come in. So then the process just takes longer.
100%.
So first, understanding the importance of estate planning and what that actually means, I think is critical, because a lot of South Africans in general, we don't think it's that important.
And you're quite right. I mean, we know quite a lot of South Africans, they don't believe that estate planning is important, really. And one of the key areas which I find it the biggest challenges that I experience with clients is understanding the very key part called the liquidity analysis, which comes into play as you're doing the analysis for this client to say, actually, to wind up your estate, you spoke about administrative part of it, you spoke about all of these things, the masters of high court, having to pay this tax, having to factor that into that liquidity analysis. People don't do that. And unfortunately, sometimes some providers actually just say, you tell me how much cover you need, then I'll just give you a premium and I will call it estate planning, whatever, or plan, or whatever it is, but you did not really do the right work or an analysis. What kind of impact does that have in you wrapping up your estate?
That is
Or your partners, or whoever else that you're wrapping up the estate for? Yeah.
that is critical.
Yeah.
So what happens is, I think widows are caught off guard, completely off guard. And it's things that you don't think about, you don't realize. And then there's bills that keep piling up, right? There is an executor that's going to manage the estate. There's a bill that you need to pay there. Your tax liability bill is now different. There's debts that's come in that you need to settle. And you haven't thought about those bills. And you also don't have liquid cash available to settle any bills.
Yes.
And some people end up in positions where now they are going to have to sell the actual property that they live in. And your home goes away. I mean, you're going through so much. You've lost a spouse. Now you don't have a home. Now you've got kids to factor in. What are you going to do? And I think that comes back to why is it so important.
100%.
And a lot of people don't realize when they are planning and getting things like life insurance in place.
Yes.
That is critical to give you that liquidity, right?
100%.
So then you save your house, you don't have to lose assets along the way.
Yeah.
Because when that happens and you have to sell assets, then there's capital gains taxes that come in.
100%. And that's the part that most people don't maybe look at it, to say that there's this thing called capital gains tax, that it is when you're disposing of an asset, it triggers that tax liability. Now, in the situation where as a spouse all I know is that my husband and I bought this house. Yes, there's a will in place. There's probably a life cover in place. What are other things probably from the technical side of things to make sure that I might be able to build up this liquidity, or if not, how can that widow find herself not to lose the house? Because one of the things that I don't know if you've heard, Chantal, but there's quite a lot of noise around the issue of people losing their houses or their family homes because there was a will, but there was no money to pay off the executor. Now there's an opportunity to sell the house and all of those technicalities, which I don't want to dwell into that, but I just want to come back to a space where how do we make sure that we empower that widow to make sure that they can secure that house by taking which steps? Yeah.
I think first of all, to be involved.
Yes.
Please, if I leave any message today, is be involved. I understand it's a difficult time and I understand there's family to assist. Sometimes there's professional assistance. But you don't have to be in every step of it. But overall, understand where you are in the process, understand what's happening in the process. Too often we find that we leave it to somebody else and
Yes.
then there's nothing left at the end of the day.
Yeah.
And then where do you start? You have to sell the house.
You have to
It's
sell
too
the
late,
house. Yes.
right? So I would say is understand, really unpack what is, and this should be happening before we get to that stage, right? What is the assets that you have? What are the liabilities that you have? If something is to happen, where will I get the liquid cash from? And usually that will come from life policies. That is really going to be helpful to avoid selling assets.
Yes.
The second thing to be aware of, especially when you start to plan and you're planning for things like, I need to have a will in place,
Yeah.
I need to have an executor, understand what that cost is.
Yes.
Because a lot of the time you see, oh, it's 3.5%, it's just, I can do this. But understand what that number is. What is that 3.5%? And what is it going to be today, 5 years' time, 20 years' time? Because it's going to be different.
Yeah.
And if I don't have a massive estate that I'm leaving for my family, let's say, for example, I have R1,000,000 as my total estate that I'm
Yes.
going to leave for my family when I pass.
Yeah.
At that end of the day, that percentage is going to eat up that R1,000,000. Then on top of that, I've got tax liabilities, I've got estate duties, I've got other things. How much of it is going to be left over? So be very clear and understand the maths, if I can say, behind what we're actually doing.
As you're explaining now, I just I'm gonna go to a practical case, and luckily, I'm gonna say luckily because the husband has not passed away, but she was really concerned, right? So here's the lady; she's running a business, and she just built I'll call it 2 block of units. One is meant for her actually she's got 2 children, so it's meant for her children, right? And then she then said, I want to transfer those units to my children because they are now majors, right? But the properties are under the business name. What are the technicalities around that?
So you'd have to understand then what would happen if when you registered it, did you put it under the business name?
Yes.
Are you transferring it? Because when it transfers to the child at some point, how is it going to transfer to the child? The CGT is going to come in there. So it's very important when we're structuring and when we're planning that we understand what the tax implications are. Because if it is in a person's name, then, for example, let's say it's a primary residence. If it is in your name, at the end of the day, you will get a 2 million primary residence exclusion.
Yes.
The business is not going to get that exclusion.
100%.
So we need to be smart in terms of how are we applying things to ensure that we're getting the best tax benefits at the end. Because a lot of the times, people choose to put it in a business, put it in a trust, for example, and that's great. Sometimes it's a perfect
Sometimes
thing.
it works. Sometimes it works.
And
it depends
sometimes
on
it doesn't.
Sometimes it doesn't. Yeah.
And we just need to
100%.
be careful.
Yes. And when will a donation tax come into play in such a transaction?
So it's going to come into play so between spouses, it's not
Yeah.
going to come into play.
Yes.
But if it's not spouses, it's going to come into play.
100%. So now, all we are saying right now, we are saying, if the business were to say, I'm donating these 2 units to these 2 children, that's where the donation comes into play. But we're not going to dwell into that much. But I just wanted to give a bit of a practical case that we're really going through right now, and people don't really understand that having to do these kind of transactions somewhere along the line. Tax is always available.
Yes.
Tax is always comes in, and we never consider looking at tax. But I want us now to go into to these mistakes that we do, especially when it comes to the issue of when we are winding up the estate, we don't get involved. We're leaving it to the executors to do everything else. There's this thing called the 3.5 rebate, abatement. Sorry. I don't want to be technical today, guys. We call it section 4B, abatement 3.5. Probably, can you maybe take us through to say, if you're looking at your estate planning, right? From properties, deemed properties, your gross estate, maybe take us through that whole line. Where does it come from? How do we build it up? And just step by step, so that probably when our viewers are listening to or actually watching this, they're able to sit down and say, oh my goodness, I'm actually sitting with a shortfall here. And to certain degrees, some of them might not even being able to do it themselves, because sometimes some of them would like to DIY, we know. But for those who say, I can get a professional, great. But let's just share the practicality or the basics of it and of that process, yeah.
So when it comes to estate duty, you need to realize we're going to list everything.
Yeah.
What is all of the assets? What is the value of it? And then what is all the liabilities? We need to realize there are deductions that can come into play. And we all like deductions,
Yes.
right? So there are deductions. Any funeral costs, you can deduct it. Yeah. Any costs around, if you have liabilities, bonds, outstanding debt, those can be deducted. Any donations made to a public PBO.
PBO, yeah.
Yes, that can be deducted. So it's important to know what those deductions are, and a lot of people don't realize all that can come into play. And then you get to the net asset value at the bottom, or assets less liabilities. What is that net value?
Yeah.
That value, then you get to bring in your 3.5, which is 3.5 million, is exempt from estate duty.
100%.
Right?
Yeah.
And if there's anything remaining, that's when estate duties are levied.
100%.
And it's levied at 20% up to 30 million. If your estate is more than 30 million, some of us are blessed, then it is 25%.
Yeah, 100%.
Right?
Yeah.
So really knowing that, and I think around estate duty, the other important thing for widows is if that full 3.5 is not utilized, it can roll over to the widow's estate in the future up to 7 million.
Yeah.
So that's important.
Does it matter the marital regime?
So then, yes, that is important. So in South Africa, you need to be married according to the legislation. I think this is something really important, because if it's not recognized, formally recognized, there could be a lot of difficulties for widows to actually get these type of tax reliefs. And they would have to sort of provide proof. Things like we actually lived together, we were considered, married in terms of common law.
Yeah.
You'd have to provide proof. I read somewhere that people were getting proof from neighbors to say that we lived together.
Oh my goodness.
And I'm like, my neighbors don't even know me. They would be like, you live next door.
Yeah, hey,
This
urban areas, we don't know each other. So basically, that could be challenging if really we don't have the community to confirm your you guys staying together. So in that, so now here we're saying liability, all assets added up. By the way, viewers, we just want to let you know that when we take all those total assets, that's where the 3.5 come in. It takes that total amount of your assets and it multiplied by the 3.5%. And by the way, if I may add on, is that the executor can also be a vet vendor, meaning that they can add plus 15% to that 3.5. So you must know these things and you must ask questions around these kind of things. And maybe coming to asking the questions, what are these requirements that SARS would need when now I need to go to SARS? What am I taking?
I think this is important when it comes from SARS requirements.
Yeah.
And I want to break it down into 4 steps.
Okay.
Okay, so step 1, notify SARS. SARS needs to be notified of the death. And when we think, okay, now how must I notify them? Like, where do I start? You can either go to their website, so www.sars.gov.za, and you will find there they have an online query system.
Yes.
And you can put in there the notification.
Yeah.
You can email them at contactus.sars.gov.za, or you can go to a SARS branch, right?
Yeah.
And you need to give them specific documents. So the documents that are going to come into play are things like the death certificate,
Yes.
a certified copy of the ID, the person that's managing the estate. So if it's an executor, it's a certified copy of their ID. Then also their contact details, so things like address,
Email
phone
address,
number,
yeah.
email address, those type of things. So all of that needs to be given to SARS. We'd also need to give them a copy of the will, a list of the assets. Those type of things need to go in, a state duty return if required. Now, at this point, I would recommend that you also attach a letter. So when we engage with SARS, we generally send a letter, we'll send out all these details, which you don't need to do. All you need to do is provide context. Say, I've attached all of these documents.
Yes.
I've actually not attached a will because there is no
No
will.
will. Yeah, I was
You
gonna go
know?
there to say some they don't have wills, but yeah.
So that would be important because when you give the information to SARS, they might think, okay, there's something missing. And then they just wait for that something. And we're not moving the process forward.
Sure. Yeah.
So that's important when we're notifying SARS.
Yeah.
And the reason you need to notify SARS is so that they can update their system. So on the SARS side, it shows that you're an individual taxpayer. And if they don't update the system to say it's now a deceased taxpayer, you're going to get assessments coming through, you're going to get returns that are due, because they don't know. They're expecting that this individual needs to be
Be submitting and returning the tents. Yeah.
Yes.
Yeah.
Now, what happens? Penalties come through monthly, every single month.
Sure.
That's an admin nightmare that you don't want. So when you notify SARS, they will update their system. Then we move to step 2. Step 2 is then the deceased final tax return. So our tax year runs from March to February, right? Now, what would happen for a deceased final tax return? It would run from March till the date of death,
Date of death, 100%.
right?
Yeah.
And all of the income,
That came through,
expenses
yes.
in that period needs to be put onto that tax return
Yes.
once SARS has updated the system. So our filing season starts in July and it runs through October for
November,
non-profs
yes, yeah.
and then Jan for provisionals.
Yeah.
But you do not need to wait for that filing season. As long as SARS has been notified, it's updated, then you will be able to file that. So the executor or the person managing the process needs to file that return. For that period, employers, investments, they will give you all of the information
yeah.
you need. You don't
Yeah.
have to wait.
Wait, yes.
And then you can file that tax return, make sure the taxes are paid over. Once the taxes are paid over and there's nothing further, so there's nothing outstanding, no penalties,
Nothing,
no prior
yes.
years, that individual return, that final return, that taxpayer can now be deregistered.
Awesome.
Right.
Awesome. Yeah.
Okay. Then we move to step 3.
Yes.
And we only need to do step 3 if there is income generating from date of death moving forward. So let's say, for example, we had somebody who had rental property, and then you had the final tax return that you inputted from March till date of death.
Yes.
Now you still have income generating in terms of rental
Yeah.
from date of death moving forward. That goes now into the deceased estate.
Yes.
And that's what needs to be filed.
Okay.
So all income generating going forward, even if there's assets that need to be sold, that will come in there. What's important to realize is this is going to be a separate taxpayer, separate tax number. So it's seen completely separate to the deceased person.
100%. And when it comes to that, probably if we were to take this example of this lady, should it be that, God forbid, the husband passes away and they're running this business together? Now, what happens to the business? Because now the business, we are both shareholders. What are the tax implications that comes with that? How does it affect the estate planning across that? Because now, at the end of the day, I'm the 50% shareholder of this business. So it forms part and parcel of my assets. So how do we deal with that problem?
So the 50% will be on your tax return, and the 50% will be on the estate's tax return.
Perfect. Awesome. Ooh, there's
It's a lot.
There's a lot happening right
And we
there.
still have to go to step 4.
Oh my goodness. And then you still, and viewers, you still want to DIY for yourself. Come on now. I think we can do better.
We're almost there. One more step. We
One
can
more
do
step.
it.
Let's go for the next step.
Okay,
Yeah.
so step 4 is, at this point, SARS will notify you that all taxes are paid. So if we look at your example where there's a business coming into play, it gets more complex, right? So if there's a business, there could be PAYE due, there could be VAT due, there could be a lot of different taxes due,
Yes.
other than just this estate,
Yeah.
right?
Yeah.
So SARS needs to make sure that you've paid all taxes across the board.
So,
Only at that point will they give you something called a deceased estate clearance letter.
oh my goodness.
And until that point, you have to keep submitting the deceased estate returns.
Until you get the clearance.
Yes.
Oh my goodness. And have you guys gone through that? And I'm asking myself to say, for people that says I want to DIY myself for this whole thing, I'm sure I can do this thing. What is the estimated turnaround time with these processes?
So it can take long. It can take years, right?
Yeah.
It depends on the complexity of it. If it's not incredibly complex, you're looking at months. If it's insanely complex, it could take years. And if there are things like no wills,
Yes.
people are not married in terms of the legal
Yeah.
understanding of South African legislation, it's going to take even longer. So the more things that are not in place, the longer it's going to take.
Sure. So we're actually sitting here with a situation whereby our viewers out there, they need to learn to actually put their house in order, really. Because for you to get to a position to get that estate clearance, tax clearance, it's a lengthy process on its own, right?
Yes.
And having to find yourself in a situation whereby there's liabilities sitting there.
Yes.
And who becomes responsible for these liabilities? So let's say now, here's this lady, she's sitting now with, there's this taxes, there's this VAT, there's all this that needs to be paid. Who becomes liable for these things?
So in this example, she's got her 50%, and then the 50% that is on the deceased spouse that goes into the deceased estate.
Yeah.
The estate, all of the taxes that needs to be managed there, it's the executor's responsibility. And I want to just reiterate here that if the executor does not manage this properly and does not make sure SARS gets all of the taxes that they need, for example, making sure estate duty is paid within the time limit, so estate duty needs to be paid within 1 year of the death. So if that's not done, the executor or person managing the estate becomes personally liable. And you don't want to be in that position.
No, you don't want to be in that position. Trust me. And being personally liable, does it mean that now as a wife, I don't have to make provision to pay off the liabilities? Or how does it work?
No.
I had to throw that one in just when I said, are you excusing me now as a wife?
No,
because you're saying the executive was going to be responsible?
No.
What are you saying to
So
me?
the estate is going to make sure everything needs to be paid from the deceased estate return, right?
Yeah.
So it needs to consider all of the costs.
Yeah.
And once all of the costs are considered from that deceased estate, everything gets considered, then the assets get distributed.
Yeah.
But if the executor doesn't make sure all of the things are paid first before distributing those assets, he can become liable. And of course, he's not going to want to pay. So he's going to
Yes.
come to you, the spouse, to say, you need to pay it.
So basically, in a nutshell, what I'm trying to say is to say, you as the wife or as a spouse, you're still very much liable in making sure that that liquidity is available,
Yes.
to make sure that these things are paid off,
Yes.
and not to find yourself in a position of ending up to sell up certain properties.
Yes.
I mean, we spoke about that rental property. You might end up having to sell it, and now you're running away. Actually, you're now losing an opportunity of an additional income that you're supposed to be earning as a spouse for the future. And talking about the future now, how do I start organizing myself and taking care of myself now? Here I am. I've cleared up my husband, I've got the estate tax clearance. How do I now prepare for myself?
I think it comes back to our earlier point around being proactive and what will happen if you're not proactive, because the buck does stop with you and you're going to have to cater and finance for all of this.
It basically stops with you.
Yeah. And it's all the liabilities that's going to be on your plate. So I think it's a perfect time in an essence, because you've gone through the process. You know what everything actually is. It's the time to make sure that you have your will in place.
Yes.
You have your financial records in order. You know your asset list. What are your assets? What are your liabilities? What are the future potential costs that could come up? Having gone through the process, it puts you in a perfect position to understand what could potentially come up and how do I then put preventative measures in place.
Sure.
So as much as it's difficult, it comes back to why it's so important to be involved in the process.
And one of the things probably that I would like to share is that we must not look at it as one aspect of your financial planning. It's important to look at comprehensively, because each and every sector of financial planning has an impact into that plan. And one of the things that probably what we don't look at is this retirement planning as well, how it can help you. And we also talk about investment planning, how it can also mitigate the or help you within your estate planning, because your certain investments can help you reduce this gross asset being added into for you to pay so much. Is there any other mechanisms that probably we could share to our viewers that can also help them to mitigate this number or this gross asset?
I think that in planning, when you start the estate planning, that's really the point, is unpacking what your assets are. Realizing, okay, I've got all of this. What would be the best management of this? Because at that stage, you can start to realize what vehicle is going to help you to reduce the tax. You're correct in saying pension, provident, all of that doesn't get touched by estate duty.
100%.
Sorry, I didn't mention that.
Yeah.
But it doesn't get
Doesn't get
taxed,
touched,
right?
Yes, it's got its own legislation,
yes.
yeah.
So that's actually a benefit. So you're not going to be taxed again. That really helps. And the retirement annuity, life insurance. A lot of people I know from my parents' generation would say to me, this was not something, this was a privilege to have, right? And it wasn't something that they would have, things like retirement annuities and things like a life insurance.
Yeah.
But that gives you immediate cash and it gets paid out much faster. Like I'm saying, the estate is going to take 2 to 3 years to wrap up.
Yeah, some of them, yeah.
How are you going to actually live in the 2 to 3 years?
Sustain yourself.
Yes.
Yes, 100%.
So that's important. I think if I can mention one other thing that I think widows tend to forget is, what about their tax return?
Yeah, talk about it, babe. Go. You know how it is, go deeper.
So, and it's something so simple, but it
Yes.
leads to non-compliance. And unintentional non-compliance is non-compliance. So when you're a widow and you've now wrapped up this whole estate and you're like, okay, this was a lot, I'm done. What do you do on your tax return? And you're going to go in and you're going to like, I know how to do this. I go to e-filing, I complete my
stuff,
ITR-12,
yeah.
and
Yeah.
then half the time SARS does it for me and I'm done.
But yeah, I'll get those auto assessments all as well.
Yes.
Yeah.
So actually, you've got to go into your tax return. You've got to update your personal details.
Yes.
It needs to indicate that now you are a widow. And I understand there's emotional elements to just updating it is
I'm still
difficult.
personally running away from allowing myself to write my husband deceased, by the way. So
It's
it's
difficult,
very
right?
difficult. Yeah.
And the emotional aspect of things makes it so difficult. And what you don't want to do is add frustration from a SARS perspective.
Yeah.
Because then now you're just adding to your grief and you're making everything worse. So putting that in is going to help you from a tax relief perspective. So that's how SARS then realizes, oh, okay, now you don't, as a spouse, you actually get certain reliefs. So you would not get assets that are transferred to you as a spouse. You don't have to pay capital gains
Capital gains tax. Yeah.
taxes. You also get other reliefs. So what's important, as much as you get these reliefs, you need to remember that your tax liability might be much bigger than you expect it to
Yeah.
be.
While you're still busy wrapping it.
Yes.
Yeah. Yeah.
So, for example, if you're married in community of property,
Yes.
all of your income that was generated from assets was split. So
Yes.
any passive income was split 50-50.
100%.
So rental income, interest income, etc.,
yes.
split 50-50.
Yeah.
Now, those assets are transferred to you. You own 100%. So whereas previously you were getting the rental income, you're getting the same rental income, but your tax bill is so much higher. And have you accounted for what that could be? Because it comes back to estate planning, especially when you're married. You're deciding, okay, I'm going to put this in your name because your tax bracket is here.
Yes. Probably it's lower, so
Yes.
it's better.
Exactly. So now all of a sudden, I could have had this in my name, and my tax bracket moved from 38 to 45. And now all my
Suddenly,
income is taxed at 45.
Sure.
So
Sure.
that becomes critical and also accommodating for that expense.
And accommodating is actually saying, how do you? It's basically saying you have to find a form of how do you now manage it in a sense of cash, because now there must be cash that's going to be injected for you to be able to manage that, because now you must pay for it. So again, there's another shortfall that you yourself were not aware of that you're going to incur.
Yes.
And now you must make provision for it. So I don't have this money. What's going to happen to me? So now I'm going to be sitting here with a liability. And now this liability is me now going to SARS and making negotiations now to say, can I pay this monthly and so forth? And I think maybe I want to go there in closing to say, when we've got these liabilities with SARS, probably can you share the process of how do you go about negotiating or even asking for a payment plan and so forth?
So you would have to request this from SARS. You can write to them and say, you know what, I am not able to make this payment at this point in time. They would have to review your case to determine if they think that you are not going to be able to make the payment. And they will allow payment plans at a certain point in time, but it depends on your financial situation. So if I have an estate that's now I've inherited that's worth 5 million, they're probably not going to give me any leeway, right? So it
because they're going to
depends.
say, well, you can sell the house for
Yes.
1 point whatever million and to come and pay this liability.
So
Sure.
it depends.
Yeah.
And it comes back to the point of before you get to the stage of I've got this massive liability, understanding, do I need 5 rental incomes? What is that going to mean for the tax? What would be the better way of structuring this? Maybe at that point in time, I need to consider a different avenue. Do I put this in a trust? Do I put it in a company?
Yeah.
How do I then
How
take
do
it
you
forward?
structure it? Yeah.
Yes.
Great stuff. Oh, Chantal, I know these text things can really get technical, and I'm sure viewers will be throwing a lot of questions on the comment sections around that. And should it be that we get those technicalities, I think me and you can sit down and brainstorm solutions to how best we can help them. And this is not to open up viewers. This is not to open up fixing problems. We're just saying, because I'm sure we can be flooded by all kinds of challenges that the viewers are experiencing when they're trying to wrap up their estates and so forth. But what is that one advice that you want to share today with our viewers today through all these technicalities that we've spoken about, all these SARS challenges and requirements? What is that one key advice you can give to our viewers today?
I think that tax is overwhelming to anybody. It's complex. But when it comes to this, when it comes to estate planning, when it comes to deceased estates, when it comes to anything around this, SARS has a wealth of information. If you go to their website, you will find so much of information that can help you. So empower yourself as much as possible. Knowledge is power.
100%.
And the more knowledge you have, the more empowered you will be, the more confident you will be to take this forward. And there is no reason not to ask the question.
Yes.
Like, if you feel there's so many things you don't know where to start, set up an appointment with SARS. You know, if getting professional assistance is not an option, SARS is there to actually assist you be compliant. And I think too often we look at it like, oh my gosh, I don't want to go to SARS. What are they gonna do?
They're gonna arrest me.
Yes.
They're gonna arrest me.
Yes.
Already I know that I've got liabilities there. So
Exactly.
yeah, so you shy away from going there. And whereas they're actually there to find solutions with you.
Absolutely.
The more you ask them, the more you get empowered. And I hope maybe as we go along, probably we can host like a workshop.
Absolutely.
For widows. A physical session would be great, whereby we tackle these things on a face-to-face basis, see how best we can help, because I do know that there's a lot.
Yes.
People are sitting, because some of them, they are stuck because of not knowing where to go or what to do. And some of them, it could be an issue of, I don't have money to pay for all of this. And not because we're saying we must offer free services. Obviously, we're running businesses, guys. Let's just go there. We are running businesses, we're running operations. But I think the most important thing is to see how best we can empower you to be able to do certain things. Should it be that probably that's where you need the professionals such as ourselves, you need our help, that's where then we can come in and help you. But Chantal, thank you so much. Really. We really, really appreciate you coming to the Space to Breathe. You've shed so much light, and I hope our viewers enjoyed this session, and they're going to be sharing quite a lot of comments or questions on the comment section. So viewers, don't forget to subscribe, to share, to like, to comment. Like I said, ask all kinds of questions relating to wrapping up with your estate, the tax implications. We are here to help you. Like I said, we are not here to get it to right to the end. But we are here just to advise you in certain things wherever we can. And thank you so much, Chantal, really, for empowering our people today. For me, this is exactly it. And this is why I said, God, what must I do now that you've given me this unwanted title of being a widow? And I said, what he said, I've given you a key purpose. Your key purpose is to educate, is to empower, and to advise my people. So thank you, because today we've just done that.
It's only a pleasure, Noni. Your strength is absolutely inspiring. So let's continue.